Tim Biggam back again this week for Traders Exclusive, and we're seeing a market that is absolutely kind of churning around today. We've seen back and forth around unchanged, but February for the month up over 6%, which hard to believe. I mean, it's been probably the quietest huge move we've seen in the market in any month in a long time. Really have had literally hardly any down days this month as well. So it's starting to get a little bit what I term creepy, to use a technical term in the market, where we just keep going up regardless of whatever news comes out. On the earnings front, certainly earnings came in but the market trudges higher. Revenue's actually going to show a shortfall for the first time in about 5 years. So, we're expanding that multiple at a fairly rapid pace here. So again, as we talked last week, you have to respect the market for what it's doing, which is just heading higher because of zero to negative interest rates around the world, but acknowledge the fact that if you are anything but a short-term trader, you are buying comparatively expensive stocks on a historic basis, certainly compared to interest rates. That's everyone's argument, but at some point I would think interest rates have to go above zero. Certainly, can they go lower? I guess Europe has proven the fact they can go negative, so how low is low? To me, 2 years ago, if you would have told me interest rates would be here, I would say the world's in a ton of trouble. If we have to keep doing this, we're in a ton of trouble. But until they actually start to raise rates, this market will probably continue to party on, or at least not have those dramatic sell-offs. So we're looking again to be opportunistic, looking to use the option scanners over at RB Trader is what I use, and highlighted a couple yesterday. Caesars had big volume, over 12,000 of the April 13 calls traded. Those calls went from a 58 implied volatility to over 70, even with the stock going up, over 70 cents on the day. Normally you see a contraction in implied volatility on up moves, but because of that big volume, it had two open interests going into it. You saw this big expansion of the implied volatility. So we're leaning with the paper, because a lot of times, these big option buys are a precursor to even bigger moves to the upside. So we're actually doing a simple buy right strategy, buying the underlying shares, selling these comparatively expensive options. We have about a 4.5% edge on the stock using my calculation. If anyone wants to get some free research on this kind of thing, you can email marketing@rb-trader.com, ask for Mark, and he'll be happy to sign you up for some free research on these buy rights. But that's what we're looking to do here. So we're looking for that 70 implied volatility to come back towards that 60 level. We'll take the trade off at least halfway, capture some of that paying on the options that we saw as well. We also saw it in BSX, Boston Scientific, on the March 17 calls. They have a deal going. These calls, again, with the stock being up, these things just exploded to the upside on big volume. So we like that combination of stocks being up, implied volatility screaming to the upside, and leaning with the paper, where we'll buy the underlying, sell these calls, and simply look for that implied volatility to come back down. If not, we've at least owned some rich option premium along the way. So until next week, this is Tim Biggam. And in this market environment where, we just keep going up while things get a little bit worse, make sure you keep those position sizes in place and those stops going. Take care.